Welcome back into the midst of earnings seasons. Passive income investors alike, I am just getting over a crazy allergic reaction that's really throwing off my balance. It gave me an inner ear infection for the last few days, so that's why I haven't been doing videos in front of the whiteboard and more or less just these on-screen videos. So slap a like if you guys are enjoying these while I put on a happy voice act. It's pretty great. But I want to break down some of the crazy earnings that have been going on and my own personal opinion on them. So let's just jump right into this. Welcome back, ladies and gentlemen. Let's get right into this, starting with Tesla. We all know Tesla has been getting slaughtered by their earnings, but they've had a lot of interesting things in that earnings call come up. And I'm going to start with a quick YouTube video for you guys. I found this little take kind of interesting. This video was just posted today, so take a quick listen.
As expected, the company is going to continue to have a rough 2019, but I still feel confident that they will reach escape velocity and fundamentally change transportation.
Why do you want a company like Tesla to go into auto insurance? They're going into autonomy. They're going into all these different lines of businesses. Don't you want them to just focus on cars?
In the near term, absolutely. And the near term is focused on cars. I think some of the difficulties that they're having with logistics, they're very open to talking about some of the long-term opportunity to get investors to focus on the bigger, long-term picture. But to also answer your question is it does make sense for Tesla to play in the insurance game because they...
Absolutely. So the reason they're getting into car insurance is essentially they're finding that people are making their cars like they're a luxury brand. So for some reason, insurance is charging people more for that kind of car, even though they have a higher safety rating. So Tesla figured, you know what? They're a big middle finger to like Geico and all those insurance companies. And they're like, you know what? We'll just insure them ourselves, which I think is a huge mistake for all the insurance companies, especially the way Tesla's brand is taking off. But yeah, this earnings has been really bad for them. It's probably one of the worst quarters, I think, in a good year and a bit. You can go check all that out. I'm sure you can watch Hyperchange and all those different channels that really deep dive more properly into this than I'm going to. I'm just kind of overlooking it. But this is where I think a good buying opportunity is. I don't think Tesla can breach much lower than this. The bottom seems to be right around this, the 150 mark. So we'll see if it can hold up. You never know. Markets are markets. But I bought this way up here somewhere in the highs, like the 340 area. So I definitely paid a premium for this, but still holding, not buying anymore, but I got this in my portfolio. Now let's talk about Altria Group. I just purchased shares in this yesterday. I didn't know what earnings was going to do. I don't think anybody really did. And I wanted to purchase them just in case, and I should have waited till today, but hindsight's always 2020. I literally purchased shares at $54 just yesterday, and they only missed earnings by a penny. The estimated earnings per share, I think, was 90 cents or 91, and we hit 90 cents, which isn't actually that terrible. Now, I think these companies are still undervalued personally, and this is just my own personal opinion. A lot of people think smoking is on the way out. I don't think smoking is on the way out, though the numbers have been falling. Again, if you could include all that people vape, all the drugs people do, I think it's just a staple to society. I really don't think it'll disappear anytime soon. And this chart doesn't justify. I wish you could put like a smoking chart up here and how much people smoke. If you watch channels like Concrete, that guy smokes like a chimney. There's a lot of different people that I still think smoke. It's like coffee breaks for them. They're going to continue smoking. It's a sin stock. Like I said, I have no problem buying more of it here. I'm just going to be patient, see how it goes. But long term, I think this company's going to do fine along with BTI. Now, BTI hasn't even had earnings. This is a British company, and from my understanding, this company does earnings every half year. So they don't do like annual earnings. They literally just do, or quarterly earnings. I think they do half-year earnings. And this company's down today just because Altria Group is down. It's the only confusion that I could put the two pieces of this puzzle together because there's no news on BTI. They don't have anything out about the company, but they're down a bit today. And again, I picked up some yesterday as well. So, I'm not doing too well with those two purchases. It's only about $3,000 between the two, $1,500 a pop. So it's not like I'm down that much overall. Now, more excitingly, Facebook. My mom still holds Facebook. I'm kind of disappointed I sold this when I did because I sold it to pay my taxes. But again, it's not like it was my money anyways. It was the government's. I made about $400 or $500, I think, on the trade. But if I just held on to it till now, holy jeebus, I'd probably be up about 1,000 or 1,500 instead of just 500, it would have made a big difference. But again, not my money, so I can't really compare. My mom, though, I picked her up some shares at literally down here in the $1.30 range. So she's feeling really happy with her current shares in Facebook because earnings obviously beat, and we're seeing a nice healthy run over the last 5 days here, from a huge jump from 180 all the way to 194 and holding strong. Beautiful thing to see. So congrats to all the Facebook holders. I like seeing you guys do really, really well. And we'll move on to my favorite stock right now that released earnings, and that is the Microsoft. Microsoft is currently, I still believe, outperforming Apple. If we take a quick peek at Apple, what's Apple's market cap? So we have 971 billion, and yes, as of this earnings season, right now Microsoft is holding the largest market cap on the planet by publicly traded companies. What a beautiful run this company has had. I can't get over that. I was buying this thing for $100 a share, and it's been on one hell of a run lately. And I'm sitting up a few $1,000s on this position currently as of the last few days, just because of this massive influx. We're up 3% today. Let's just take a look at the last 5 days here. Look at this, guys. So it looks similar to a Facebook stock. Incredibly large run. People didn't think it was going to continue into earnings. And even after earnings, they thought a lot of it would have been priced in. But clearly not, as this thing exploded. We're up 30%. In such a short amount of time. Anyone buying this, high five to you. I don't like the PE on it currently. The PE is still a little high in my opinion. I'm holding this long term, so I'm not too worried about it right now. But you know, it's another incredible stock. The chart on this is wild. A good thing to have in your portfolio. So I'm going to continue holding strong. But let's get into Constellation Brands, another one of my drug stocks. Now, Constellation Brands has released earnings, but way earlier. They did their earnings call a while ago, and I think they were just at par with their earnings. But a lot of the excitement is coming around Constellation Brands. They sold the $1.7 billion sale of 30 brands from its wine and spirit portfolio. As we all know, they've been trying to get rid of some of their wine brands. And they've been trying to cut off their lower segments. The stocks, they're trying to sell off their brands that aren't making them the kind of money they want. This is a really high-end brand company, which is why I love it so much, because they focus on really high-margin brands that sell really well. They don't want any trash. They don't want junk. They don't want cheap beer. They want like premium brands, which is also why they bought Canopy. They want the best of the best, and that's why I love this company. I think the management's incredible. We'll do a bit of a throwback because, as you guys might remember, if you did any research on this company, when this company crashed down into the 160s here, the owner and his son bought like 1 million shares in this company, like a stupid amount of money in this company, because they couldn't get over that it was this cheap. And I wish, like I said, I saw kind of the same opportunity, so I picked up down here. I couldn't help myself. I definitely picked up some shares in this. I still plan on buying more. We'll see where this rally takes it. But this rally in the last month is strictly from that earnings and the fact that they sold off those major wine brands for quite a healthy chunk of change. That $1.7 billion they sold pretty much pays off most of their debt, I would imagine, that they own to Canopy. This company is just incredible. I can't get over how well run this company is. It's got a crazy low PE right now. I think this company is just well positioned. The chart's unbelievable. This company just, it makes me drool when I see it. So I'll have no problem owning this into the future, and will continue to. Now, GEO Group, this is one that I talk about all the time, and it's reactivating 1,000 beds that essentially, I didn't even realize they had facilities that weren't in use, but it turns out they have a facility that they're going to allow U.S. Immigration and Custom Enforcement for reactivation of its existing 1,000-bed South Louisiana ICE Processing Center. I don't know precisely what this is. I'm gonna have to do some more research on it, but it's something weird that I heard. And the fact that they're opening up 1,000 beds is going to generate $25 million in annual revenue is an incredible thing to hear. Blows my mind really, because this is like, imagine owning a piece of real estate that had 1,000 beds, and they're like, the government's like, fill those beds, we're gonna pay you for them. Doesn't get better than that. So unusually, the stock actually hasn't done anything. The stock is still suppressed. It's been down. Even in light of this news, we haven't seen any real rally up, which is a good sign to me because, like I said, I'm going to have some dividends coming in over the next couple days, and I will definitely be picking up some more shares of this company down here. The dividend yield, I believe, is stable, though it's a rocky dividend. Again, this dividend can go from anywhere from like 5%, 12%, depending on the government contracts. But again, I do believe it is a stable, high dividend yield. And again, with a company that has a forward PE of 16 in a REIT sector like this, it's a reasonable size market cap. It's a pretty small REIT, but still bigger than most to be paying a dividend this high. So I love this company still. I'm definitely picking up some more shares. So I don't think earnings has come out, so we'll just be patient and see where it goes for that. Now, moving into the future, guys, there's a lot of stocks that have released earnings. There's a lot of stocks to release earnings. I'm just focusing on what I find most interesting. And coming up, Disney, I think, is going to be an interesting earnings to watch. Disney's earnings come out, I think, at the beginning of May. So pay close attention here, guys, because the reason Disney is high flying right now and it's exploded is because the streaming service it is going to introduce, and that it has been talking about, but that streaming service hasn't produced a dime of income yet. Just remember that. So if earnings are a miss, this could be catastrophic, just because this is hype. Hype and earnings, man, it makes for a rocky roller coaster ride, especially for anyone. Day trading, you might get lucky with it, but honestly, if you're a long-term investor, this is where your stomach's gonna get a little sick, like mine is right now, from this horrible ear infection. But moving on, the next big one we're going to look for, I think, is April 30th, and that's Apple. This is one of my largest holdings as well. A PE that's half as much as Microsoft, but almost sits at the same market cap. Beautiful company. I have currently valued at $18,000 in this stock. I have no problem with that, and I don't plan on selling it. A lot of people have. There's a lot of people selling Apple stock right now, and I'm sure if you watch Financial Education Channel, there's a few small channels I watch where people just sold Apple for the sake of selling it because they think this rally might have a pullback. And to me, I honestly think they're all insane. Apple is one of the best brands on the planet. Of course, it's not as exciting as Tesla. I mean, a non-profitable company that has nowhere near the market cap. I mean, Tesla could explode into a huge market cap. It could be one of the biggest companies in the world one day, but right now it's not. And the best brand of all time ever is Apple. But I just see these smaller YouTubers selling their Apple shares because they think there's going to be more volatility in the future. And to me, they are complete nutters. I have no idea why you would sell this company, especially if you have no exposure to it in any other dimension, because this is probably one of the lowest PE tech stocks on the planet. It was the largest company on the planet. It was the first $1 trillion public company ever that held anyway. Well, that almost held. There was a time where another company went to $1 trillion, but crashed very shortly after. And I think it was an oil company or something in China or one of the banks. I can't remember, but don't quote me on that. But if there was one company you'd ever want to own, it is this one. So make sure this is part of your portfolio. I don't like telling people what to buy, but I think you're an idiot if you don't own a tiny piece of Apple. The brand on it is going to sustain for lifetimes, I think. And what they've done and the investments they're making, I think, will only propel them farther into the future. I wish they would stop doing share buybacks and focus more on the dividend increase. I think they would attract a lot more buyers if they could just start increasing the dividend. Share buybacks are such a big thing, but I'm a dividend guy. But this will be one of my largest holdings for a while. And when the time comes where I do plan on selling a bit of it, it's only just going to be the profit I'm going to take out of it just to buy some more dividend stocks if I don't see a dividend increase over the next few years. But in the meantime, holding strong, excited to see earnings on this. And I want you guys to let me know in the comment section below, what stocks are you expecting to see earnings on? What are you excited about? And what stocks do you own that have released earnings? I'd love to see what is going on with your portfolio. There's a lot of people out there right now I know that own SNH. And this is one that I've been meaning to do a breakdown on because I did a review on this stock a little while ago. And lately I have been watching it. I haven't talked about it. I want to make a video on it because man, oh man, has it ever plummeted. They've cut the dividend. The stock has come way down for a REIT. And this is one of those REITs a lot of dividend investors I know talked about and own. And I feel bad for them because they figure, senior housing is a very reliable thing. But this kind of movement comes down to management. And the fact that we're seeing lows that haven't been hit since the early 2000s. I don't know how much of a buying opportunity that could be. I really want to do a further deep dive on this and just see what's going on with it. To be honest, though, I would approach this with extreme hesitation. I do not like seeing REITs that plummet this far, this fast, and especially when they're cutting the dividend yield. It really shows there's a sign of problems with management and the way they are buying their real estate, especially when we can buy stocks like RioCan. RioCan, one of the largest realty companies in Canada. This company is getting involved into basically they're getting out of they're getting out of commercial real estate, essentially like mall real estate. They'd own like the malls, rent them out, because they feel like Amazon and online sales are going to start taking over. And they've really started focusing on building massive condos and things like that in Toronto. And they're also trying to do these living style condos where there's like a mall downstairs and you can rent, work, and do everything you need within the condo in Toronto. And this one's been doing pretty well over the last little while. I want to pick some shares up in this. I'm hoping we can get some flattening out of it. The dividend yield isn't as intense, but it's a monthly dividend. It's a decent PE, and I think this company has a lot going for it. And again, guys, it's a really healthy REIT. As we can see, there's been some volatility with it, but you're talking about a company that's only moving this chart, because the company only moves a few bucks. The chart looks a lot more wild than it is. Because as we can see over the last 5 years, we haven't seen much in a decade, but a good dividend. And if you're buying this, you're buying it for a dividend, just like you're going to be buying SNH for the dividend. But the problem is if they can't sustain the dividend or the company, what's the point? So again, I would rather go with something like this than SNH, just to get a better, reliable yield. Always let me know what you think, guys. I love your opinion, and I hope you enjoy these videos. So stay cool, stay awesome. I look super forward to chatting to you tomorrow.